CEO, and David, CTO of Sportsman Logistics. It's great to see people joining us this evening, wanting to learn more about Sportsman Logistics and what it's been doing in the world, and particularly in Calgary, and where it intends to go, and what it's raising money for. And also, hopefully today we'll have a bit of an insight into what's in it for you as well. So I'm going to start. I'm going to ask both of you first. What was the moment or situation that made you realize that there was a significant gap in the market for small and mid-sized sporting goods retailers?
Neil, do you want to start that?
Sure. I think for me, it was kind of two things going on side by side, and then suddenly realizing that they actually could, it's like the peanut butter and the, you got chocolate and my peanut butter kind of argument. The two things actually would be better together than they were independent. And the first thing was inventory management. As a small retailer, you've got a lot of stuff you have to keep track of. You're buying stuff, your suppliers are sending you stuff. You have to know where all this stuff is. You have to make sure that they're sending you the right stuff, that they're not charging you too much for the stuff they're sending you. All these things of inventory management, is fundamental to a retailer. Likewise, when a small or mid-sized retailer is looking for financing, they're going to their banks, they're going to lenders to look for financing, and they're hearing the same responses. And it's typically that you may have a lot of money tied up in inventory, but we don't really consider it worthy of lending against. It's not like cars or land or buildings. It's something that's hard to track. It's something that's expensive and labor intensive to track. So we generally don't want to do financing of that small a number based on the asset that supports the loan. And it was sort of while both of our systems were moving forward and we were working on financing and running into the challenges, and also updating our inventory system from a system from the 90s to now, the aha moment was sort of these two things actually work together and work very well together.
Yeah, and for me, Victoria, it was very similar, but I was sort of working on implementing supply chain technology for two companies in parallel. One, of course, being with Neil with the ski seller, but another one in electronics manufacturing where we were sourcing materials worldwide. And it kind of amazed me that here was a company out of Calgary doing $10 to $20 million a year, buying product and shipping product literally all over the world, $1 million in the bank, and the banks are going, well, we know you need another $1 million of rotating inventory, but we don't really want to lend it to you. We'll lend you 10. We'll lend you 50,000, but yeah, we're just not interested in that space. And I thought that's the perfect company to be lending money to, but the Canadian banks just really weren't equipped to do it. And they all cited exactly the same problem: was we don't have visibility to what's going on in the supply chain. And the tools we were building out for both companies, and obviously the most important here to Ski Seller, really provided the management teams all that visibility. And I was thinking very similar to Neil, well, we have all the answers to that. It's sort of too bad we weren't a financial entity or a bank. And we thought, well, perhaps there is a need to combine that, the technology with the financing capability, and actually provide that service in Canada.
And so, when you, Neil, when you were, solving the specific channel, and you shared that with local retailers, how was that received?
Well, we haven't really shared the solution as much as we've had a lot of discussions with retailers about the challenges they face. We're competitors with other ski shops in Calgary, but the industry also works together, and you go to different events and you meet other retailers that have challenges. We met a guy who was in the business and he was looking to sell, and it wasn't a ski business, but he was looking to sell his retail business purely because the amount of time and effort his wife had to put in to sort of track some of this stuff and do the work. She had a job and she didn't really want to do this part-time anymore, and so they were looking at an exit strategy because of the inability to access a system that would reduce the labor. So we we sort of heard it all over the time. And of course, you talk to any small business, and there's numerous stories of how banks really play lip service to small businesses, but when push comes to shove, they really don't do a lot for you. I mean, we've heard stories where lenders have said, we'll lend you money, but you need cash security. And when you say, well, how much cash security? They say, well, how much do you want to borrow? So you're going to give them $100,000 so they can lend you $100,000. It just doesn't always make sense. So we haven't sort of taken, we know it solves a problem for us and a challenge for us. I know that there are a lot of people that share that challenge, and we started to have the discussions, but it's we think we're on the cusp of something that'll be important.
Yeah, that doesn't seem to compute. Security is 100,000 to get 100 back. Yeah. So, David, how did you approach designing the inventory management system to meet the unique needs of these retailers?
Well, it's sort of, as I alluded to before, working on two systems at once. Really, the focus was on building something that was exceptional for the ski seller, and working on that project while overseeing another one in a sort of unrelated industry, but with similar supply chain challenges. We were able to kind of use the two engineering teams from Oracle and take best practices from each and apply it actually to both companies at the same time. So we're a little bit lucky that we had both projects kind of running concurrently, and the two engineering teams were very willing to solve problems in either project. And what we found is sort of building the system out for ski seller. And then, as Neil said, you talk to everybody in the industry, you get kind of a good feel for what other people's problems are. We realized pretty quickly that what we built works fairly generically. It works for a lot of people. And even in the two companies being in different industries that I was working on specifically, you realize that 90% of the problems are the same. So if we could build something that solved those companies' problems, we built something that was solving everybody's problems. And banks are the banks, lenders are lenders, all their issues are really the same. So you solve one and you've solved a lot, as long as you do the first piece properly.
And Neil, what were the key factors you considered when integrating financial solutions into the Sportsman Logistics offering?
Well, there's obviously a couple of things. The crowdfunding model is an unusual model. It hasn't been around a lot on the equity side. Retailers typically are trying to get bank financing and not terribly successfully. There are merchant cash advance companies that will lend you money by sort of pre-buying your future credit card receipts, and those are typically very small and very expensive loans. So what we sort of discovered is that with the changes to the Alberta Securities Commission rules, you could now raise enough money that was meaningful. I think it's 2 or 3 years ago, they changed the limits from $500,000 to $1.5 million. So it started to become a viable avenue for the smaller retailers versus, say, a mom and pop business working out of their house. So that was sort of the first thing. And the second thing, sort of when Mountain Equipment Co-op went under a few years ago, there was a sense of sort of frustration and loss because people had signed up to be members, and just like a Calgary Co-op or some of these other groups, you don't pay a lot for your membership, but you really have a sense of belonging and that you're part of, a bigger community. And the two concepts of equity crowdfunding, now that it was big enough, and the source of community, especially, Ski Seller has a lot of customers over a lot of decades, parents that have shopped with us because their parents brought them in when they were kids, and now they're bringing their kids in. So we thought that sense of community matched reasonably well with a small retailer and a crowdfunding model. And we also think that there is a significant benefit as you bring on more and more retailers into the system. The investors can now start participating not only in the economic returns, not only in the social returns for helping small business, but if we can negotiate product discounts at these other stores, every retailer offers deals to certain people. Maybe it's employees who get a certain, discount on the stuff they buy, or partners in the business get a certain discount on stuff they buy. So to expand that to a broader base of hopefully loyal customers, so that as you add retailer number 2, 3, 4, 5, you're starting to grow the base of support for everybody, including the retailers. Now some of our ski seller customers will be looking to buy running shoes at a sporting goods shop because of that potential discount. So just creating that sense of community.
That's probably a good place to ask the question. If you could detail the investment opportunity with Sportsman Logistics, particularly focusing on the dividends and benefits for investors.
Yeah, so we looked at a number of different structures, and what we settled on, given the size of the investment, investors can get in for as little as $500. It also means you're going to have a fairly large number of investors. So it's different, than creating a company that has 15 investors that have put $100,000 each. That's a lot different than a company that has 3,000 investors that have put in $500 each. So we had to sort of come up with an investment that was passive for the investor, because you don't want to have too many commitments if you're only putting in a smaller dollar value. We want to make it tax advantageous, and typically dividends are taxed better than interest and some of the other forms of return that an investor can get. And we wanted to create that sense of community through the product discount. So we came up with a preferred share that pays a dividend rate that's a little higher depending on which category you invest in. And we went with the sporting theme just because that's the industry we're in, where if you're at the bronze level, you're getting an 8% dividend. If you're at the silver level, you're getting a 9.5% dividend. And if you're at the gold level, you're getting a 11% dividend. And likewise, your discount with Ski Seller increases on products. If you buy products through Ski Seller, you'll get a better discount depending on the level of investment that you've put in. And obviously, we can't commit future retailers to what discounts they will provide our investors, but the concept will make sense, and we know that we will get some level of discount from the other retailers for our investors as well. We just don't know what it is. Yeah. So that was sort of the driving force behind it. Make it something that's tax effective and reasonably secure for investors given the risk.
Yeah, and if I may expand on that a little bit, Neil and Victoria, I think from my perspective, it's kind of key to understand where those dividends come from, how we generate that. So kind of netting it out, having sort of discovered that some of these retailers need assistance bringing in inventory and putting it on their floors. What we realized effectively, if we can buy all that inventory for Ski Seller, with Sportsman taking over and taking on all those systems that we built out, we can buy inventory for anybody. So we go out there, procure the inventory for say $100,000, put it on the floor of a local running shoe store or a local ski store. As that inventory sells, we're seeing it sell in our systems. We're actually able to bring that money back. It's almost like factoring, financial companies that factor. As the product sells, Sportsman's getting repaid, but it's also getting repaid with a margin. So they sell $100,000 of inventory. Sportsman's getting, say, $108,000 back. But now, if we can do that over a 45-day period, we can then reuse that $100,000, or in fact that $108,000, buy more inventory, sell it again, right? So we use it over and over and over. My background's manufacturing. The more times you can turn inventory, the more money you make. So if you can turn that $100,000 5, 6, 7 times a year, you're not making 8 or 9% on it. You're making 40, 50% on it. Out of those profits, we pay the dividends out to the investors, and then we create a pool of capital that allows them eventually to be able to kind of redeem their shares and say, you know what, I'm going to retire now. I'd like to take out my $20,000. I've made $15,000 of profit off of that, off of a few years. So I'm going to take the $20,000 out now, and we'll be able to provide that kind of liquidity for them. From a retailer's perspective, If I go out there and get a line of credit for $100,000 from the bank, well, I'm maybe paying 7 or 8%, but I have to pay a $5,000 annual fee. I have to pay audit fees to my auditor to go and verify that inventory for the bank up to 4 times a year, which is shocking. It didn't used to be like that, but now we're seeing banks request 4 audits a year. Those audits are $2,000-4,000. Well, now your fees on that $100,000 line of credit are your 7 or 8% that you're paying today, plus your $5,000 fixed fee, plus 4 audits of maybe, let's call it $3,000 each, another $12,000. They're paying 20% or more on that, which is a lot of money. So they're saving money by only paying Sportsman 8, but Sportsman is using that money multiple times a year to generate a really good return for the investor. So it's a little bit of everybody wins. So I know Neil's background has been very much community focused, much more so than mine, and involved in the softer side of the investment, saving heritage buildings and helping local retailers. I was more kind of, let's net out how we're going to make money for everybody, and this is how we're going to do it. And I don't think we're embarrassed to say to the retailers that of course we're here to make money for the investors. Right? That's the whole point. But they're saving money, our investors are making money, everybody kind of wins. So I think
the best deals, sorry to interrupt, the best deals are always the win-win deals where there is something in it for everybody. So obviously we have to make sure the Sportsman investors have something of benefit, but the retailer as well. Even if the retailer decides, what, I'm currently okay with the financing I have or my own resources, our system still allows them to participate in the inventory management system and the accounting integration if they want to do that, even if they don't go all the way to the finance. So definitely the finance, the whole kit and caboodle is the most valuable for a retailer, but they still don't have to go to finance if they're happy with the systems we have in place. And we think what will happen is they will see how the system works. They'll see the benefits. They'll see the fact that, if you buy a bunch of winter inventory and you use your vendor gives you 90-day terms to pay for it, and you have a bad season and now your vendor's knocking on the door saying, you now need to pay us for the product, and you're saying, well, yeah, but we haven't sold the product yet. We don't offer that short-term finance. We offer a long-term stable source of capital for these retailers, and as much as we can turn it over numerous times because we will have more than one retailer, and hence there's a pool. It reduces the seasonality risk to the investor, and it reduces a lot of risks. So it is an attractive system. I'm not all lovey-dovey. You do have to make I do have. Dave's telling me that he doesn't have a heart, and I do. You do have to have both sides. You have to have an economic return. And if that is the cake and the social return can be the icing, more power to you. You don't want to build a business on icing foundation, but it doesn't hurt. It doesn't hurt to have a feel good component.
And I think
go ahead.
I was going to say, I think another key point to that, Neil sort of touched on the investor risk there. When I was, I won't say any age, when I was much younger, you're looking to invest a few $1,000s and try to make 10 or 20 times, right? That was sort of the fun and excitement back in the 90s tech heyday, right? Well, what I found is, as my colleagues and peers have aged a little bit, the market's shifting a lot to lower risk but more cash flow, right? I want to invest in something that I know I can get my money out of when I want to, and I want to get cash every quarter that I'm going to spend on my kids, that I'm going to spend on vacations, that I'm going to spend on whatever. So really, Sportsman is more designed along that, right? People are putting in their money. There's hard assets that are going to be there to secure it, and they're going to generate cash flow every quarter. Probably after the first 1 to 2 quarters where things kind of ramp up and start, they're getting paid a little bit of an income stream from it. And then one day when they do decide they want to retire and go live in Bali or something, they take out their $20,000 and away they go. So it's a little bit different than it was for me back in the tech days, where you're throwing a whole bunch of darts at the dartboard knowing you're going to miss with 5 and one of them's going to hit for 10-fold or 20-fold. It's put something somewhere stable, and let's generate some income off of it, and not be too stressed out about it. That's really the goal of Sportsman. So it helps the investor, it helps their peace of mind, it helps the retailers, and as Neil said, it's structured around making an investment in the icing on the cake, as it really is doing good work for the local.
There's a question that comes from that. So talking about sort of, there's a lot there for Sportsman. You can see how you're going to make money. There's a lot there for the retailers, the stability and long-term vision of money. You talk about dividends and preferred shares for the shareholders, or for the people investing today. Can you talk a little bit more about the dividends and how they're structured, how they work? The old "show me the money." When will they start to see some return?
Well, it's a relatively simple concept in terms of how the share structure works. So we have effectively two types of shares. We have preferred shares and we have common shares. So the preferred shares are the investors who put their money in. Let's say they invest $500. They get a guaranteed or specified, I guess nothing in life is guaranteed. They get a specified dividend rate of, let's say, 8%. And every quarter, every 3 months, they will get their dividend check, although everything's done electronically nowadays, but they'll get their dividend check of 2% for each quarter. So that's the return they're getting on a pure economic basis. Because it is a dividend, when they file their tax returns, they will typically pay less tax on that. So if they were getting 8% interest on, say, a GIC, they would actually pay more to the government in income tax than they do when they get an 8% dividend on a preferred share. So they'll, obviously investors have to talk with their own tax planners and confirm all the details, because it varies, a bit. But the concept generally is that dividends are taxed at a better rate than interest. And then at the end of the day, when they want out, because they don't have any, as Dave says, they're not going to put in $500 and have it worth $5,000. It's not we're not drilling for oil and gas and hoping we have a gusher, but also hoping we don't have a dry well. We're investing in something that's constant and stable and generates that sort of standard return. And that's the pure economic return. Now, a lot of investors are also likely going to be customers of the retailers. So if they can go and buy a pair of skis or a pair of running shoes or whatever other companies we sign up at discounts off the retail price, there is also an economic return there. And those types of discounts, because they're generally offered to the public and offered to the group, are sort of over and above the dividends that they're getting. So sense of community, product discount, and dividends really becomes an attractive, we think, an attractive investment for a community crowdfunding campaign.
Yeah, and of course, because the ski seller is a bit of a captive client that Neil can kind of sign up at will, that's the first place to start, right? So it's a known business. It's a business that's also, so it's an understood business by us, but it's a business that's known right across the province. So it was really a very logical, great, easy place to start and branch out from there.
Excellent. We have a question from the floor. Is there a need for bookkeepers for small businesses?
Very, very much so. I think all small businesses are looking for bookkeepers. I see Neil was going to jump in on that one as well. Using the tools, and Neil can elaborate more, we can really reduce the amount of effort that's required and make it a whole lot simpler. As Neil said, the one business he talked to was looking to exit because they simply were running out of energy to do the books. So for sure, there's a big need for that.
Well, there's components of a business that we don't get involved in at all. Payroll, for instance, retailers are often hiring hourly employees, and the payroll component of tracking how many hours they put in that day or that week, doing the payroll, all of that is valuable, important stuff that has to be done by a bookkeeper, by somebody that this system doesn't really get involved in. But there's also a lot of manual labor. Like the general business cycle for a retailer is you buy something, or you place an order for something. You place an order for 10 pairs of running shoes. A little while later, some running shoes show up at your door. Now, hopefully it's the 10 you ordered, but typically it's probably 6 of the 10 you ordered, because the shipment has, been delayed, or they've had some available now and some come later. So you have to be able to track that you ordered 10, but only 6 showed up. Then you also have to track, what if one of those pairs of 10 or 6 that showed up was damaged and you have to send it back? Do you get your credit for it? What happens if the invoice comes in and they've charged you for all 10, but you haven't received all 10 yet? Like, there's a lot of manual processes that go into a manual system to track inventory and the receipt and the payment of it, even ignoring the selling it to the customer component. Just literally getting in the door and making sure you're not getting something you didn't order, or not getting what you did order and paying the right price. And that's often done by your accounting and bookkeeper people. They come into the office and they are doing accounts payable and they're entering invoices. Well, these manual systems don't really have a way of double checking that if you thought you were buying 10 pairs of running shoes and they delivered 11 and they invoiced you for 11, they've now increased their sales by 10% because you didn't realize, or your system didn't catch the fact that they overshipped you and overbilled you. And a lot of the bookkeeping effort that goes into that type of system, our system can do. Now, yes, you need a bookkeeper. You need somebody to do the computer entry. There's always going to be that component, but it probably is 50%, if not more, of the labor saved in that side of the stuff. So yeah, there'll always be a need for bookkeepers, but if you can go from 2 bookkeepers to 1, or from 1 bookkeeper to somebody who's coming in twice a week or whatever it is, there is some decent savings. But we aren't getting rid of people. We're just reducing and redeploying them.
And I think it's a bit of a paradigm shift too as well, because those people now also, because everything's cloud-based, they can be working from home, right? So you can have a bookkeeper at home that's maybe doing 3 or 4 different companies really quite effectively, because they have visibility to everything right from their home office, or for those road warriors like yourself, Victoria, from the airport, right? It's pretty easy to do. So.
Well, and the reality is the system is drastically different than it was 20 years ago. 20 years ago, you ordered something, it showed up. A couple weeks later in the mail, you got an invoice for it. Nowadays, you're getting an invoice electronically before the product has even left the supplier's warehouse. So you've got an invoice already here for $25,000 of product while you're waiting for the product to show up. So you still have that manual component of matching what did you get versus what did you order versus what did you get billed for.
Yeah, and sort of going back to that economic return that I harp on, if you can get that product in the door, on the floor, and out 2 weeks faster, that's ultimately over a year. That's a lot of money, right? That's a lot of money. You have 2 weeks less capital tied up in inventory. We're turning our dollars faster, right? So we're making more of a return. So again, everybody wins. So a few days here and there efficiencies adds up quite considerably. So,
and things like minimum reorder points. If you're selling a product and you know that it takes a week to get the product from your supplier, and you want to place a reorder, it's nice to not to have to walk around and look at the shelves and see, are you getting low on that? Should I reorder? The system, you could actually program the system that, hey, when our store gets down to 15 of these things, we need to place another order. And then the moment you've sold the product and you're down to 15, the system sends the alert out to your buyer, or by email, or however you choose, and it says, you now hit that magic number, it's time to reorder. And so you don't lose sales by someone coming in and you don't have the product because you didn't order it in time because you got busy. It's a very effective system for a lot of retailers' needs.
So you can actually, as a small or mid-sized business, act like the big box system have.
Very, very much so, exactly. And I think also, sorry, I cut you off again there, Neil, apologies. One of the key things I think for us to articulate for everybody is that, well, sort of the systems can work for almost any company. We're very, very much focused on the sports side of things for now because it's a market we know, it's inventory we understand. We don't want to be buying perishable items that 2 months from now are going to be going rotten and bad because that becomes a useless asset for everybody. So really focusing on the supply chains we know and understand, and we can ensure proper products are being purchased that are good from our investors' point of view, as well as retailers' point of view, that are safe, secure, and will turn fast, I think is critical. So we don't want to be out there buying apples for Safeway. We want to be out there buying sporting goods that we understand and we can control. And that's a big part of the problems that the banks and the lenders have. They don't understand their clients' businesses very much because they have hundreds of them. I mean, they have thousands of them, right? So they can't be an expert in everything. We can absolutely be an expert in our niche and control that process and control that inventory and help our retailers as partners, right? So I think it's key to stay a little bit focused there. And it's something I don't think we talked about at the beginning of this webinar, and definitely not something we talked about in the last one, but I thought it'd be kind of important to speak into. So.
Well, and it also, this has grown up from the retailer's perspective. We didn't go out saying, let's create a company to help retailers. We actually were the retailer trying to figure out how to help ourselves. And one of the good things with the ski seller inventory is it's very diverse. You have equipment, you have clothing, you have big items, you have small items, you have items that are gender specific, male versus female versus unisex. You have items that are sized, different sizes of boots or different sizes of jackets. You have colors. You have a fairly decent, complex inventory base to create a, so the system that we created that worked for Ski Seller can easily work for a company that has a complex inventory like this, or if it has a simpler inventory, it can work. But most important, it can be customized to that particular retailer. So if they want to track something that we have never thought of as a retailer, why would you ever want to track that quantity or that characteristic of your inventory? It can easily be customized to track that. So
we have a question along that. So, so the system will save money on stockouts, determine reorder points and lead time, resulting in increased inventory turnover.
Yep.
Yes.
And that obviously varies from industry to industry. In the ski industry, we have certain products that we can order all year long, 12 months of the year. I can get lip balm, any time of the year that I want. There's some products that you place what they call the booking order at the beginning of, the end of, we place our booking orders in December, January for delivery in September. And they may or may not have after you've sold out and you want to buy more, they may or may not have any product because they only made so much. So there are different types of inventories that can, so some of them you couldn't really put a reorder point on because you don't really have an ability to reorder, but you can certainly put a warning and you can put it on class. You could say, tell me when my women's ski boots of this particular size drop below a certain level. So it may not be, any particular item. It may be the categorization or the class of item you want to make sure, hey, when we start running low on kids' ski jackets, I don't really care what brand we're getting low on, but I know that we now don't have enough of that class of inventory. Let's go find some more.
Yeah.
And you might be able to automatically order it, but you can get your buyer out there looking for the products that you're starting to get short of.
Yeah. To go a little bit deeper for the participant there that asked you that question, Victoria, I mean, in sort of one industry I've been involved in, we had to look forward 3 years for ordering product. So, I mean, everybody's familiar right now with how hard it is to get a car because you've heard about the sort of the chip shortages and whatnot. Well, you look at electronics and literally products are getting ordered out 3 years. Neil's ordering for Ski Seller out almost a year. So if you want to really use your dollars well and turn your inventory quickly, you need to be looking out, even as a retailer now, almost a year ahead. So you better have really good visibility and really good control over what's coming down the pipe because you want it on your floor, sold, turn those dollars over and redeployed into the next order, which you actually placed 9 months earlier that you have to actually get back out there quickly. So it's really an important concept to have that visibility, to have that control over the inventory from both a financial point of view and from a just an operational point of view. Our interest, of course, is we want to turn the dollars from our investors' dollars as many times as possible every year. Right? I don't want stuff tied up for 2 or 3 or 4 weeks longer than it has to be. I want our retailers to be very, very efficient, and I want placing orders out 6 months, a year, 18 months if possible, because then I know I'm turning that $100,000 3, 4, 5 times just off of that one stream of orders. Right? That becomes absolutely key. So whoever it was that asked that question is right on the money. Right? It's be efficient, turn it as many times as you possibly can. The ideal for most manufacturers or retailers is turning inventory monthly. Almost never happens. Very, very few people really achieve that number of turns, but you can get halfway there for sure if you're doing things properly.
The person who asked that question just said, yay. So I think they liked your answer. Okay. We've got a question. Can the system work with QuickBooks Online?
You can really work it with anything these days. And I'm probably both the right guy and the wrong guy to ask that question to, because sort of being in sort of cloud computing over the last decade and a half, you can really move data between anything, anytime if you know how. So you don't need QuickBooks Online. You can do everything from an inventory perspective right within the system itself, and then simply feed your financial data over and put it in QuickBooks, Simply Accounting, Wave Accounting. It really doesn't matter which system you use, or you can actually run it right out of Oracle itself. I mean, they started as a financial accounting company, right? As a small business, I would probably recommend actually QuickBooks. That's the tools I've always used, and you can run a business probably up to about 10 million a year out of QuickBooks Online. It's actually a pretty powerful, effective system. So that's the long answer. The short answer, yes, absolutely, you could work with the two.
And I think from ski sellers' perspective, when we started the process of looking for an upgrade to our systems, there really were sort of 5 components that we identified. One was the payroll, and we're hiring a little north of 100 people when you're in the busy season, and then significantly less when you're in the off season. So payroll was its own beast, and it operates independently but integrates back into the accounting. So that one kind of was a standalone. But the other 4 we found were very connected, and we sort of discovered that there wasn't really a company that had software that did all 4 really well. There was, companies that did really good accounting, but maybe not so good inventory management, or really good point of sale for your cash register, but not really good accounting. And we sort of decided for our business, the 2 fundamental pieces we thought were important was accounting and inventory management. And if we found a technology that did that really well, then we could add on the point of sale systems and the website systems as sort of the 4 pieces of the puzzle. And we chose not, and we considered, do we do something and then use, say, QuickBooks or some of the other accounting packages that were out there? But the Oracle system really did such a good job of accounting and inventory together that we chose to do that as sort of the package. But long answer to the short answer. The short answer is yes, you can integrate with anything.
So did I gather there we've got some insight into future developments for the product?
Well, potentially. I mean, we've architected things so that inventory core is really the centerpiece of everything, and it just branches out talking to all sorts of other systems, even ourselves. It's not all Oracle. There's other stuff we found that we think was better, that the Oracle backend is feeding in real time out to Lightspeed, if I'm allowed to actually say, Neil. I guess I hope I am, because I just did. But it feeds that point of sale real time, a separate e-commerce engine. It could feed a Shopify engine, WooCommerce, any of a dozen .NET tools, all that, it could feed them all simultaneously. It's not a problem. It automatically is sending data feeds to Google actually for us. So whatever people kind of envision is doable in that sort of best of breed scenario that Neil described. But you have to have a really powerful engine at the beginning to facilitate that. But again, I want to reiterate, all of it is designed to turn dollars faster and more efficiently, because that's how all of us make money. That's how the retailer makes money. That's how Sportsman makes money. That's how the investor makes money.
So let's talk about the investment. Where can people find out more details about the investment, and what is the process?
Well, it's effectively a two-stage process. You can go to the sportsmanlogistics.com website and start your search there. It will eventually lead you to our exempt market dealer, because for us to do a security offering like this, an equity crowdfunding, there's an awful lot of rules and regulations you have to comply with to make sure that everything is done properly. And Equivesta is the exempt market dealer that we have partnered with based on their experience in this crowdfunding market. So really the first step is go to Equivesta, create an account, and not an investment account, but create a username and password, because that allows them to then start showing you the offering memorandum document that is sort of the fundamental description that the Securities Commission requires us to present to investors. And you still obviously have no commitment. You haven't signed up for anything. You're not going to be inundated by emails any more than we're already inundating you with emails now. Mm-hmm. And then if you are more comfortable, then you can set up an investment account with Equivesta and begin the process of actually investing. So really, maybe it's even a three-step process. You got to be comfortable with what we are and who we are and what we're, the vision that we have. Then you want to see the offering document to get a little more of the meat and potatoes, nitty-gritty details, and then you proceed to invest. And then our system is designed to have a 90-day raise period, so you can't raise money for longer than 90 days. So we're, I think, 59 days left in our 90-day raise, something like that. And we also can't close until we hit a minimum number. It doesn't make a lot of sense to go through all this effort and raise $50,000. You can't turn $50,000 enough times in a year to make Dave happy. You need more.
Exactly.
You're behind your turnover than just a small amount.
Yeah. We do have the question of how much money have you raised by crowdfunding to date?
So it depends. It depends on how you define raised. If you define raised as in people have put money with Equivesta into Equivesta's bank, into their trust account, then I think it's about $8,000. In terms of our wait list and the people that have signed up and said, yes, I'm interested and I would be considered, I'd like to invest about this amount, because we had a range, that would bring about somewhere between $600,000 and $700,000. And what's happening, I believe, is that people know they want to invest, or they think they want to invest, but because they have 59 days to invest, they're waiting, and it's spring break, and everybody has a reason why they aren't getting to do something now because of the.
If I were to do it again, and I'm being honest, I would not do a 90-day period. I would do a 30 to 60-day period, because the interest we had far exceeded our expectations. And because of that, we thought, well, let's do sort of this 90-day period to make it easy for everybody. I probably would have done a 30-day closed and then done another 30 days. Our goal, we want to get into the market right away with those dollars, right? Because again, I know I'm beating the same drum. I want to start turning them over and over and over to generate those dividends for everybody and get things going. So 90 days was probably too long. I also know, Victoria, that sort of within the base of people we're talking to here, and even the previous webinar, we have a fairly wide range of people in terms of their sophistication. For example, spoke with an investment advisor today that was part of the previous webinar, and obviously very knowledgeable. And then talked to a few people that were fairly new to it. Just to maybe simplify who and what Equivesto is. Equivesto is really the company that is overlooking us to vet us and make sure that the shareholders and investors are protected. So their role is as much to protect the investor as it is to assist us in doing the crowdfunding. So because of that, there is a bit of documentation they want from everybody that it sort of pales in comparison to what we've had to provide them. But it's important to know that they're kind of there to make sure everybody's protected and everything is kind of smooth and compliant and reasonable. So I've had quite a few people ask me who or what Equivesto is. So.
Yeah,
and sorry to interrupt. That they're also a completely independent middle person. So if you want to invest more than $10,000, you, under the securities rules, you have to be an accredited investor. And what that means, in simple terms, it means a whole bunch of things. But the most common accredited investor is someone who makes more than a certain amount of money per year or has more than a certain amount of assets, net worth. And the Securities Commission concept is that if you're wealthy enough, you can protect yourself. You can hire the lawyers, you can hire the accountants, you can hire all the experts to make sure that you're not getting into something you shouldn't get into. So if you want to invest $25,000 with us, one of the things Equivesto has to do is they have to satisfy themselves that you meet that requirement. So you have to give a little more information if you want to invest $25,000 than if you want to invest $500. But whether you're a $500 investor or a $25,000 investor, Sportsman and Ski Seller ultimately, obviously, none of us get access to that information. That is completely in Equivesto's control, and all we know is who invested and how much. We don't know. You could be very wealthy and choose to invest $500. We don't know your status.
Yeah, exactly.
And as Equivesto will tell you, it's really the same level of information if you want to invest if you want to create any sort of a stock market trading account with any online trading company. There's a certain level of information you have to provide, and that's what you're being required to provide. So.
And then once you've provided it to them once, you can invest in any of their deals. They're protected.
So. We've got not a question here, but a point here. Equivesto, very easy to work with, fair, and answer all questions very quickly. So that's good to hear. And I think that's one thing it is more complicated than buying a book off Amazon, but it's no more complicated than setting up a mutual fund or setting up a Quest Trade account or anything like that. So, think of it more like that than buying a book off Amazon.
Yeah. And one of the challenges too is when you say crowdfunding, people are sort of used to the GoFundMe form of crowdfunding, where somebody has a sick child or they've had a family tragedy and they're needing to crowdfund some money for a good cause, but not an economic investment. What we're talking about is equity crowdfunding, which is really a way of raising investor money in the market, and it's effectively a public trading of securities, and the Securities Commission, monitors and sets the rules and regulations on how that can be done, unlike the crowdfunding for the social causes out there. So it'd be nice if they didn't use the same name, crowdfunding, but they are fundamentally different between a GoFundMe crowdfunding and a Equivesto.
Yeah, very much.
Yeah. So I'm going to ask one wrap-up question. What is your long-term vision for Sportsman Logistics, and how do you see investors playing a role in achieving that vision?
Well, my vision ultimately, and then I'll let Neil go last so he can get the last word in, because we're always fighting for the last word. But my vision is we'd like to build that pool of capital so we can have more retailers, more partners out there turning over more money, which just ultimately allows for everybody to make more. But the ultimate goal for me is to have sort of that entity that is liquid so that people can put in their $10,000, $500, 25,000, whatever it may be, probably more in that 1,000 range, and take it out whenever they want, right? So they can put it in, they can generate a return off of it for a while, and then they can pull it back and go out there and buy a home, right? Spend that money on something else. So it's to have a place to park your money, make a really nice quarterly return on that every quarter, and then be able to pull it out. And slowly that means we have to build the capital base, build the base of retailers, and maintain security through that whole thing the whole time, right? We're going to try to stay very focused on the products we know, the industries we know, and not be out there buying solar panels and putting them on homes and stuff. It's a great thing to do, not for us, right? It's staying within local retail, sporting goods, things that we understand, generate a good return, provide liquidity, and make money, not be greedy, help people at the same time. So now you can have the last word.
Is this officially recorded so that I actually get the last word?
There you go.
I think my goal is to, much like Dave says, we're not shooting for the moon in a very short period of time. This isn't a get rich quick type of concept. It's can we add 5 or 10 retailers a year? And obviously it'll more likely 5 at the beginning, and hopefully as the word gets out, it will increase. But can we slowly grow our retail base and ultimately the investor base to service the retailer base, and do something that might generate between 25 and 35, 50 maybe retailers using the system in the next 5 years. So we've done sort of our pro formas on what if we get about 5 new retailers a year for the next 5 years to get up to 25 retailers. Given that they're small and mid-sized companies, we think that that's achievable. So that's sort of our goal. I don't want to work forever, but I'm not ready to stop working yet either. So.
Yeah. And I'm going to lie to you because I do have one last word to sort of throw in there. Sorry. One of the questions I had today was sort of the mute. Yeah, there you go. Sort of what's in it for us. Well, I think it's also key for people to know that the very first priority is the dividends to the investor. Before Neil and I make anything, it's got to be after those dividends are paid and done, and then we would look at us later. So it's key to know that the investors are first. So we make our money the same way, right? Putting in the money and generating a return for us. So it's not going to be a scenario where we raise $250,000 and $100,000 of that is going to expenses. Absolutely not the case. There's a little bit of expense for Equivesto and for raising the money, but I'd like to see 200 to 225,000 of that first $250,000 in there buying inventory being turned to generate the returns, right? It's not going to a huge management team and 30 people. It's all going into the market on behalf.
Well, the reason, and I will get the last word in here because I'll just jump in. The reason that that's possible is because as much as this is a new company and a new opportunity, we've been working on it for 4 years. This wasn't a hey, let's start a company that does this. We've put in the time and effort and the sweat to get it to where it is now, so that there doesn't need to be those kind of costs because we've already self-absorbed those types of costs. So the more money that can get in the system working for the investor, the better everybody is, including the retailers and including us.
Agreed.
Last word. Agreed.
I'm going to get the last word in. So I just want to say thank you to David and Neil today for joining us and giving us a really good insight into the business. And thank you to the attendees. And I know a number of people are planning to listen to this. So however you listen to this in the future, I hope you got a lot out of it. Key thing here is please go to equivesto.com and find Sportsman Logistics. You have to sign up, as you heard, and you'll get the full information, and you can do your own due diligence and look to invest. If you have any other questions, we will be emailing this out to everyone in the database. You can always reply back and the team will get back to you. And as we heard, the Equivesto team is very helpful too. So you can always reach out to them. Thank you very much, everybody, and have a good evening.
Thank you, Victoria. Thank you, everybody, for.
Thank you, everyone.